Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined once again by Lior Gantz, Wealth Research Group, someone that we've talked to many times before, and there's a lot in the news right now that one just can't ignore. Obviously, we've heard a lot of talk from the Federal Reserve about potentially lowering interest rates, and then that's followed by a huge boom in the gold market, a huge boom in the crypto market. Of course, as many of you probably have seen in the last while, gold is at the highest it's been in about 6 years, and Bitcoin hit and tested around 11,000 US dollars. Lior, I wanted to hear your thoughts on this massive boom that we're watching take place in all these areas, while people kind of start to shy away from stocks, shy away from the US dollar as well.
Sure. The dollar actually very quickly went into a bear market in last Friday. So we're doing this interview on a Sunday.
Mm-hmm.
Last Friday, technically, it went below its support level, and it actually ended up in bear territory just for a few minutes, and then corrected back up. We will see what happens this week. But if that level is breached again to the downside, then that is the most important event of the year. Josh, I remember last time I was on your show, I told you that 2018 was an anomaly in terms of the performance of the US dollar. The last time the US dollar was the best performing asset in the world, as it was in 2018, was in 1969, which is 2 years before the biggest devaluation of the dollar ever. Mm-hmm. So it tends to have a peak right before there's a need to seriously devalue it for many international reasons and banking reasons. So we could be on the cusp of that. The gold rally into 1400, it's very strongly correlated with the bonds market. In other words, what drove gold into the 1400 range is the promise or the premise, the theory that central banks will start lowering rates across the board. So you got the ECB in Europe, you got the Bank of Japan in Japan, and you got the Federal Reserve here in the States. They're all indicating that they're going to start easing again. Now, when they eased starting in 2008, late 2008, early 2009, the unemployment rate was very high, close to 10 on the official one. So who knows what it was on the shadow one. But the employment market was very sluggish. Companies were very cheap, like stocks were very cheap. And there was a surge of millennials coming into the jobs market, to the labor force. So easing into that sort of environment made it so that by 2011, 2012, stocks had recovered completely, and then the economy kept on moving up while companies did a lot of buybacks, record amount of debt issuance, and here we are in 2019. When you ease into this sort of environment where stocks are already fairly valued, and by some matrix they're overvalued as a group, and some indicators are even historically overvalued, like generationally overvalued. So depending on what sort of indicators you look at, and the employment market, shadow or official, doesn't matter. The U.S. is hitting peak employment. Companies are having a hard time raising wages on current employees, because the cost of labor is chipping into their profits, and they don't want to overpay for extra hours, etc. So this is easing into a very, very tight market as it is, and a tight domestic economy as it is, with the consumer in sort of a much better place than it was 10 years ago. So gold has rallied on that premise. If the dollar starts breaking into a bear market, which is what it did on Friday and may confirm this week, then it's not just gold, it's commodities. It's the entire realm is changing. You already seen oil bounce 10% this week and silver bouncing right with it. So we are seeing early indicators that other traders, algorithms, etc., are seeing this. And once the Fed starts to say, "Hey, there's headwinds," the manufacturing is very very low, it's contracting, then you'll see this confirmation. With that confirmation, gold can really make that move that I told you last time. That last time I was here, it was around 1285, I think. I told you, the major point here is 1365. If it goes past that, it goes to 1400. We wrote about this at wealthresearchgroup.com/Fed/enemy and /Trump about this tight relationship between the Fed and the election and Trump. So you can read in those 3 reports about it. If the dollar breaks down, gold will be able to go to 1704, which is my target for this bull market for gold. More importantly, we've seen obscene gains this year with cryptocurrencies. Been loving it as well. And so these 2 cash alternatives will absolutely fly off the charts if the dollar goes into bear market. It's a very different environment. So when the dollar is in a bull market, as it's been in the last 8 years, tech can really soar while commodities falter.
Yeah, and I should also note, we've seen the value of corn increase dramatically lately. We've seen a lot. This all seems to stem from this need to go, to lower interest rates. We saw in Australia about 2 weeks ago, they lowered interest rates, and it seemed to almost signify some kind of domino effect. The United States, they've been kind of desperately pushing interest rates up for a while because from our calculations, we're looking at -2 to -3% in interest rates if we were to enter into a major recession scenario. And obviously, you guys have been very accurate in your research and what you've put forward over the last several years. And I have to ask, though, when you see this happen with the dollar and at the exact same time you see gold go up, which of course is historically significant, we've seen many times before, and then we also see cryptocurrency driving up at such a incredible rate like we haven't seen since 2017 anyway. What does that signify about gold, silver, cryptocurrency when we see this pendulum kind of effect with the dollar going down and these commodities and assets going up?
Sure. So there's a few things at play here. One is the trade deal. If China and the U.S. can work out a trade deal or the preliminary terms for a trade deal, this is very bad for the dollar. Not having a trade deal forced China to lend Washington about $2.5 trillion over the past 30 years. And so they hoard treasuries. Once there's a trade deal in place, you don't need to hoard the other country's reserve currency. So you're going to see a flood of dollars going back into the U.S. banking system. And you're not going to see a lot of bid for the treasuries. That means that the Federal Reserve will have to monetize those treasuries. The Federal Reserve banks will have to buy that debt unless you want to see Washington fighting with 4 or 5% interest rates on their 10-year bonds, which it cannot, right? It just cannot sustain entitlements and paying interest rates on 4 to 5% and run the economy as it is. The system will just collapse. So when the Federal Reserve starts monetizing debt openly, not as an emergency measure like it did on QE, but as a matter of routine, Josh, the market will instantaneously shift the risk profile for the US dollar. Why would you? So the bonds are a huge bubble, right? Because if you believe that the Federal Reserve can monetize debt indefinitely and keep interest rates low indefinitely without it having any backfire effect, then what's the problem, right? Well, you can always print more money. Inflation will never go up, and we will all be living on more and more debt. But there's no problem, really, right? So that is modern monetary theory. That's what it says. As long as you don't have inflation, just keep printing, and we'll all live well beyond our means. And the rich will get richer, the poor will stay poor, but there will be no riots. That's the modern monetary theory. That's what we have. We have a haves and have-nots economy brought about by monetary policy. And these academic, lunatics think that this is going to go on. So Ray Dalio, who obviously predicted gold soaring 2 years ago and positioned his fund accurately, is saying, look, the dollar is going on a 5 to 7 year bear market. It's going to go down in purchase power by 25 to 40%, which is huge. It's probably going to test its lowest point ever on the DXY, the index, the dollar index, which measures it against a basket of other currencies. Whenever that happens, the gold soars. So that's proven. That's historical. That's all good. And commodities tend to follow suit. Whatever is priced in dollars and the dollar goes down, commodities and real assets go up in price. Since commodities are the cheapest and they haven't joined the party, they haven't joined the real estate party or the stock market party, they will absolutely be favorable to stocks and to real estate from institutions. So you will see a lot of money coming in to commodities. Then the trade deal will make it so that commodities will even be more strategic you're already seeing it with the threat of a rare earth ban from China. So commodities are going to be also very important going forward on that front, on the nationalistic, protectionist front, that every country will look to be very independent with regards to its energy requirements and commodity requirements. That means that instead of buying the cheapest commodities from other nations, you will try and mine it in your own country, even though the costs could be higher. So you are facing a situation where commodities will go up in price. Thirdly, and you talk about silver, silver has been trading very different from gold. We wrote about this at wealthresearch.com/ratio and /rally. The ratio between them is historically high. Historically high. You can go back thousands of years. You will never see 85 or 90 to 1 for such an extended period of time. In a gold has gone up on political reasons, whereas silver does not. Because central banks are only buying gold, and because Chinese investors tend to buy gold much more than they buy silver, you haven't seen silver catch up to gold. But in a dollar bear market, there's no comparison. Silver is a much tinier market, tighter market, less liquidity. The futures market is much more leveraged, and the paper markets, the manipulation from the big banks is much more obvious. Mm-hmm. And you're going to see silver making phenomenal moves in the dollar bear market. So just you have to be patient. See that the dollar confirmation is in for next week, and we will update this immediately as it happens on our free newsletter. Mm-hmm. With regards to cryptocurrencies, it looks like what's happening right now is a mix of two things. First of all, the adoption is becoming absolutely broad, right? You have institutions coming in. You have Facebook Libra. You have Buck that's going to launch real soon. But you have these major institutions that are in there. I mean, you can't mistake it. AT&T, Microsoft, Starbucks, PayPal. These are the largest companies in the world for retail or for technology, and they're coming in. So that's one thing. And then the second thing is with regards to what you're saying, panic and global uncertainty. It looks like Bitcoin is becoming more proven. So people thought, well, is it or is it not a safe haven? It looks like there's no question. People love the characteristics that Bitcoin shares with gold in terms of being a cash alternative. Very fast, very durable. You can hold it and move it around much easier than moving gold ounces or bars or bullion, etc. So it has a lot of features that are going forward, and I don't see any reason for people to assume that whatever they assumed 2, 3, 4 years ago with all of the stigmas that were on Bitcoin. It looks like it's going to stay and it's going to be a very legitimate asset class. I mean, just the price gains alone in 2019. I mean, come on, it's been insane.
It's absolutely ridiculous. It's like getting in on a massive company like Twitter the day they go public or something. It's except for that times 10. I mean, going forward, I've seen some technical analysis of it. There's many different opinions. It's impossible to really say where it's going to bounce to and where it's going to bounce down to, etc. But one thing is for sure, people are moving over to crypto because it is more and more proven by the day. Obviously, there's scalability issues with Bitcoin that people need to consider going forward, especially with fees. But nonetheless, a friend of ours here at WAM, David Morgan, recently talked with us about how gold is essentially meeting a historic precedent where about 50% ownership is private and 50% government, banks, and etc. And so while a lot of people are concerned, well, you know, the banks are going to spoof the gold markets as they have so many times before, they're going to buy it up. People are buying up gold in numbers like we've never seen before, at least in recent history. And as for
central
Bitcoin,
banks only, if I may just say it, central banks only control about 10% of the gold supply, of the physical gold supply. About 50% is jewelry, and most of it is in India and China. If you look at the global, the global picture, so their paper manipulations in London and New York has really been a hot topic over the past 4, 5, 6 years, but there's no institution that can hold back a real gold bull market. You just cannot hold back the demand. And similar to Bitcoin, Josh, gold does not have an intrinsic a static constant intrinsic value. So you can't say, hey, gold is worth 1,600 or 1,700, and you can't say about Bitcoin the same thing. Both of them are priced relative to alternatives. Okay. So in other words, in a world where governments are perfectly trustworthy, you would not need chaos hedges like gold and Bitcoin that much. In a world where, you know, you can't even put one Republican voter and a Democratic voter in a dinner together because they will, you know, refuse to sit there for more than 2 minutes. One hates Trump and one loves Trump. Yeah. And they can't come to terms on anything. Then you need gold, you need Bitcoin because stuff happens and etc. So their value is very relative to what is happening in the world.
Well, it's very subjective to how people value it. I mean, there's a scarcity, application, use, and demand. I mean, there's no magical intrinsic number. Its value is based on what people are willing to pay for it and what people are willing to use it for. But I have to mention, I mean, you know, something like cryptocurrency Bitcoin was invented by Satoshi Nakamoto, whoever that is, in order to combat against a crisis, a financial crisis. I mean, that was the original idea, and we're going to see it tested really for the first time going forward. We have no real historical example of, you know, something like Bitcoin versus financial crisis, though you can compare it to other assets, of course. But Bitcoin currently right now is the 8th biggest economy in the world. I mean, it's the size of Bitcoin as a currency anyway is massive. Gold, I believe, being number 1 from a chart I recently saw put forward by Forbes magazine. But I mean, that is huge, and it makes us wonder, you know, when a dollar crashes, obviously we're going to be judging something like Bitcoin versus the price of living versus, you know, supply, demand, application use, etc. And like we said, lots to be said about scalability. But I wanted to ask you, Lior, we recently spoken with Robert Kiyosaki, who most people are aware of in the financial world, and he was talking about he doesn't think it's a recession that we're seeing, but more of a depression. I'd like to hear your thoughts on exactly what kind of beast we're dealing with here.
So yeah, let's just describe what's going on and not put a term on it, right? Mm-hmm. What we're seeing is a haves and have-not economy. So in the United States, in the past 10 years, lower interest rates and the fact that the S&P 500 or the 504 largest companies in the United States derive about 50% of their revenues and earnings from outside the US, has made it so that corporations have flourished via buybacks and shrinking the amount of shares that they have outstanding, and also through a bull market. Why through a bull market? Because their earnings are phenomenal, and the power of the average person to negotiate his wages in the US and abroad is very minimal. CEOs have had the, I wouldn't say privilege, but the leverage of telling their employees that, look, your wages are not going up on you, and if you don't like it, you can find another job. That sort of a situation in the past 30 years has really made it so that CEOs' compensation, or the top echelon's compensation, has really gone up, because their compensation is really derived not on just base salary, but on earnings and results. Whereas the mid-level and low-level employees have seen their wages go down. So you have the CEOs, or the top 20, top 25, top 30% of the population, seeing their wages grow exponentially, along with the stock market growing exponentially. And on the flip side, you see about 70 to 80 to 90% of the population, depending on the country, with lower wages and with no assets. So because their wages are going down, they buy less and less assets because they have no power of savings. And so they don't enjoy the secondary engine of the equities market or the real estate market, etc. So this is a huge, huge problem, because on one hand, you have the beneficiaries of this economic system. These are the top echelons of business, and they grow their wealth twice, by wages and by equities. And you have the other side where they see flat to lower wages, and they don't participate in the growth of their economy. It's very concentrated at the top because of that. And so if you're asking me what we're seeing the birth of the haves and have-not economy. There's a few things that we have to consider here. One, this is not going to stop. The only way for what's going on to change for North Americans is if they find industries that they can excel at more than the rest of the world. The baby boom miracle, which is that one family member can work and support a family, put their kids to college and retire, what we saw in the 50s and 60s and 70s, did not continue into the 80s and 90s and 2000s, though Americans still have that mindset that, hey, I'm middle class, I'm not broke. But it's not true anymore. And what brought that miracle of high power wages and a lot of purchasing power was the fact that in the 50s and 60s and 70s and until 71, the dollar was backed by gold. Other countries assumed that the United States was keeping a 35-1 allocation of gold to dollars, and it started to pop that bubble in 69 when the French prime minister said, I want an audit. But for the rest of the time, while the rest of the world was really just starting to come out of World War II in Europe and in Japan, the United States was an empire. Yeah. But that thing is over. It's over. As soon as people can realize that, they will understand that nothing is special about America anymore. There's nothing special. You get up in the morning and you fight with 8 billion other people that want to be smarter today than they were yesterday. They want to be more ambitious, and they want to have more competitive advantages than they had yesterday. So you're fighting on a global market, and you're fighting not just with other people, you're fighting with automation and with robots and with systems that want to replace you. So the jobs market is very, very stagnant on what it can do in terms of real wages. And for the haves and have-not economy, what people should understand is the best way to move from the have-nots to the haves is to understand that the haves have a pile of cash which is unbelievably large. Yeah. And what they want to do is they want to fund great businesses. And so if you can find ways to approach and network with the wealthy, I'm not talking about the elite, I'm talking about people that are just wealthy because they worked hard and they benefited from the system, from the capitalistic system. They're not part of this. They're not part of the 1% and the deep state. I'm talking about regular people that just have money. And they want to invest in small businesses in their communities, and they want to fund venture capital, and they have a few other friends that are in the same position as them. If you can network with them, if you can find them, you can switch from the haves not to the haves in similar fashion to what we see on the show like Shark Tank, right? Mm-hmm. This is the perfect projection of the haves not. You see a bunch of haves, and multiple people come with ideas to pitch them. This is the economy here in North America. There is just no way to have a good life with a regular job. You either need to rise to the top of your organization, or you need to move quickly from haves not to haves by having a solid idea and transition it into a business.
Yeah, well, it goes back to that saying, your network is your net worth, and it also kind of goes back to that phrase, the keeping up with the rat race, because when it comes down to it, that's what we're really dealing with. We're dealing with an incredibly competitive system, and I have to mention, though, Lior, I mean, China, India, both countries are set to surpass the United States in the coming years, and to be completely honest, I mean, most people, the vast majority of people don't know what's going on, and a lot of those people don't really care about what's going on. So as we reach this kind of peak pressure in the monetary system, one has to wonder, I mean, how is that going to naturally be affected? How will people naturally react to that situation, and how is that going to affect us too?
I think that's a phenomenal question, because when it comes down to it, you saw what happened in 2008, Josh. In 2008, you saw that when it comes down to it, at the end of the day, the regime, Washington, central banks, the Treasury Department, the people that are making the most important and difficult choices, they don't trust the population. They just do not trust the general population to handle a crisis. One, because they don't believe that they're educated enough, like you are just alluding to. People don't care. They're glued to, TV shows or whatever they're doing, and they don't even know what the Federal Reserve is, for the most part. And they have very little in savings. The average person has literally below $1,000 in savings. Mm-hmm. We're talking about hundreds of millions of people in North America and Central America alone, but in Europe and in Asia, it's the same thing. Most people are about a month to 2 months from being broke if they don't have a job. And so what you saw in 2008 was that George Bush actually told Paul Volcker, I am not bailing out anyone. These banks made bad bets, and I am not here in Washington to bail out anybody. But then 4 to 5 days later, when they came all back, Bernanke and Geithner and Volcker, and they just showed, I'm sorry, not Volcker, Henry Paulson, yeah. The Secretary of the Treasury. So when they showed him what can happen if banks fail, and then General Motors cannot pay employees because they can't withdraw. All the system works on trust and on liquidity, intraday liquidity between banks, the LIBOR. And when that freezes. It doesn't matter how much cash there is on the sidelines. It just doesn't want to move. Mm-hmm. Nobody trusts the other banks' reserves and what they will do tomorrow. And so that's what happened in 2008. And they could have let it fail. They could have let it fail and saw what the consequences will bring. It could have been like 1992 Los Angeles or whatever, and let the free markets, work itself out for a year or 2 or 3 and see what happens. But they didn't want to do it. The United States is traumatic about the Great Depression in 1932, where the Federal Reserve did not act, and therefore it acted like with all the force that it has. And I do not believe that will change in the next one. Now, I don't think that the banks will be the problem. There's other bubbles that are much more dangerous, and the banks obviously have, being very conscientious of the fact that nobody in Washington will ever bail them out. It's political suicide. So what I think will happen is you'll see a lot of this talk about universal income or tax credits or helicopter money. Doesn't matter. It's going to be capital infusion, cash capital infusions with incentives to spend it for the general population if things get really bad. So you're going to see something like money that comes into your bank account, but it evaporates in 18 months if you don't spend it. So you will have to spend it into the economy. You will have to stimulate the economy with it. Something of that nature will come along. It doesn't matter if I'm right or wrong on the 18 months or on if the entire general population will receive it, or maybe just the veterans will get their promised retirements like 20 years earlier. It doesn't matter. They will stimulate the economy by blasting the general population with incentives to spend newly found cash. And you know what? Everyone will spend it, right? Will you let, if you have money in your bank account that it goes bad in 18 months, you'll probably spend it within 18 minutes. This is what Americans would do. And so I think that monetary policy will get even crazier. And one day, it could be tomorrow, or because 2008, in one day it changed from we trust each other to we do not trust each other. So it can happen tomorrow, but in all likelihood, it will happen sometime down the road when other countries will stop to trust in the system that it can be corrected or managed or monetized, and then they will see that the American policy is to inflate the debt away. And when that happens, then that's going to be the real problem. Now, many people invest in gold for profits, right? Or in Bitcoin for the profits. You need to have two mindsets. One is the hedge. How much gold do I need to own in order to hedge all catastrophe? For me, it was 2 years worth of living expenses. So I took whatever I make, whatever I spend, the family unit spends in 1 month, I multiply it by 24, convert it into gold. That's my hedge. Mm-hmm. Same thing with cryptocurrencies. That's my hedge. I don't touch that money. It doesn't matter if it goes up or down, unless it goes really to the moon. It stays there, and it's a hedge against catastrophe. Above that, I can speculate on the price if I want to, right? If I can trade in and out, etc., in gold and silver and gold stocks or altcoins and Bitcoin, etc. Mm-hmm. That's on top of the hedge. So just don't make the mistake of thinking that it's all one basket. Have insurance, but then if you think the price is going to rise because of demand, have speculative bets in play. But understand that those speculative bets can go up and down. You saw what happened in 2018. You need to be very conscious and disciplined with your stop losses, and don't chase prices higher, etc. If you missed on something, just wait it out. Sit aside. There's more opportunities coming. Let opportunities come to you, and you do not chase them higher because most people end up losing a fortune that way.
Yeah, historically, you look at something like gold, and it's very much wealth insurance, but that's not to say you can't invest in it. Obviously, we've seen bull runs in the past that were incredibly phenomenal with gold. And I mean, you can really play with any market, though. I mean, our old friend Jim Rogers trades fiat currency that he hates. He hates the fiat currencies, but he trades them, and he's been able to make a lot of money off of them. It's not to say you can't create value, but
He and the two other traders that he grew up with on Wall Street, they're all three of them have made serious money in currencies. Yeah.
Yeah, absolutely. So while I always look at something like gold and silver as well as wealth insurance, protecting purchasing power against a crisis, as they have been throughout history, there's also a lot that you could do by trying to hedge your bets a bit. And I mean, that very much goes for something like Bitcoin, because I mean, if you invested in Bitcoin even in the beginning of 2017 at $900, I mean, think of how much money you would have made up to 20,000 trade out, buy in at 3,000, up to right now it's 11,000. I think he'll be going up for quite a little while anyway, with some minor fluctuations. But nonetheless, I mean, There's a lot you can do with this as a currency, as an investment, and then there's a blockchain infrastructure technology, which is also very important to this argument as well.
You know what's interesting? In 2017, in March, Wealth Research Group, the newsletter that I found, it's a free newsletter. We covered Ethereum at $12 a coin. It was March of 2017. Monero at about $19 a coin. I interviewed Litecoin founder Charlie Lee when it was $20 a coin, and the Dash people when it was $30 a coin. Now, the gains that came in the next 6 months were historical in terms of percentage, but the markets were so small that you can only buy tits and bits. So unless you find a way to invest thousands and thousands of dollars, you made symbolic gains, and in terms of what you could have done compared to what you've done. Mm-hmm. This year it's not. So when you came into the market, back to the market, after Bitcoin had its 80% loss, which is a normal bull market for it, around $3,000 per coin, and you came back, there was any liquidity that you wanted. You could buy a normal size position, same position as you would buy in a blue chip. So 5 figures, high 5 figures if you wanted to. And that's the big change this year for 2019 for me, that I came in January and bought a large piece, mm-hmm. right? And not what we term as a symbolic piece, a few $100s here and there, which is what the market was like in 2017 when it just got started. So, or when the mania just got started. So I think that is a big change that's happening right now. And there are other ways to track the price of Bitcoin without even buying Bitcoins. So there's more ways of doing it in 2019. It's a much more evolved market.
Oh yeah, I remember back when in the early days of Dash, friends of mine telling me to buy Dash at like $4 or $5, and I'm like, I tried to, I was looking for ways to, and it's like you got to download the whole blockchain, all that kind of stuff, and I just gave up. And I wish I didn't. I wish I put some more effort into it. But I mean, with that said, now there's so many opportunities to do this stuff. I'm not a big fan of the online exchanges, but there's lots of opportunities there. There's lots of phone wallets, lots of hard wallets. There's so many ways to get into cryptocurrency now that you could really realistically teach your grandmother to do it at this point. But with that said, Lior, there's a lot happening right now. It's something I've been waiting for all of 2018. I've been sitting waiting patiently for 2019, and it's really starting to come together. Going forward, can you let everyone know where they can find more of your work and get involved in your newsletter and support the work that you guys do?
Sure. I think one thing that's important is if you go to wealthresearchgroup.com/top, T-O-P, that's the wealth library that includes all of our PDF special reports that we've ever published. And you can download from there. If you want to have like a weekend reading or just in general financial education, that's what this is all about. The highest priority and top quality information is always going to be on the free newsletter, because that's how we can update and alert on the spot when things are going on. And we also publish information that is very updated and on the spot. For example, in January we said this is it. It's the Bitcoin's bottom, for example. So it's a lot of general information about the economy, but it's also a lot of what's going on in terms of specific opportunities. And with regards to gold speculation, I know you talked about that. We wrote the most comprehensive report on all types of gold stocks and gold investments that you can do. You can go to wealthresearchgroup.com/gold playbook for that one. And it's really comprehensive. It goes through all the different types of stocks, the risk levels, and what you need to understand before you start getting into mining shares, which have been incredible wealth generators, but incredible wealth destructors as well. So that's why it's these niche industries. You need to really be educated to get involved.
Yeah, we're living in historic times. You guys are always very, very accurate and down to the detail, and also easy for everyone to understand as well. So that's also a really important part of bringing this to people that are trying to get into this, trying to understand the markets, trying to understand the monetary system, and develop their own wealth and preserve their own wealth and ensure their wealth for themselves, their families, and their future. So that's really important. I always appreciate you joining us. Always great insight into these issues that are need to know information today as we see really a change of the guard take place before our eyes. We should all be very lucky to be living in the times that we're living in right now, because we are witnessing something that is truly almost unprecedented. It's really exciting. So again, thank you for joining us, and until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here at WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we're so heavily demonetized and censored and shadow banned. It's getting really bad, folks. If everyone just gave $1 single a month to say Patreon or our Subscribestar, where we do subscriber-only content, we could really get out of this rut that we are currently in as YouTube tries to stifle independent media and prop up the mainstream media. This is really important. This is one of the most important times in independent media history for us to say it's now or never. Let's keep moving forward and let's be that change that we wish to see in the world. Of course, there's also our Bitcoin address below as well as on the screen for you to scan if you please. And of course, we got events coming up. So make sure to check us out at anarchovegas.com. Anarchovegas.com. Use promo code WAM, that's WAM, for a 10% discount on your tickets. It's on July 19th, 20th, and 21st in, of course, Las Vegas, Nevada. That's anarchovegas.com. Make sure to check us out there and find us on websites like BitTube and Minds, and just try to support independent media, if not myself, any of the other big independent medias out there, to help us continuously bring our message to you free of charge so that we can really change the guard as we move forward into a dramatically polarized, crazy future. Let's try to make it as sustainable as possible. It comes down to you guys. You are the change you wish to see. You guys will help us get through these tough times. So anyway, check out all those links, and until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.